Hey there, this is the practice problem for chapter 9, and I want to point out one of the things that you might want to start doing is to have some T accounts that you draw up. So my recommendation is start by putting in a sales account, T account, because they have cash sales and credit sales, and they are talking about cash sales as being 1,905,000 and credit sales being 5,682,000. Okay, there will be a total for that, and that comes out to be 1,905 plus 5,682 would be 7,587,000. Later on you'll see why I'm doing this. Okay. Then in addition, they have unadjusted trial balances, including accounts receivable and the allowance account. So I do likewise. I put accounts receivable. And I put in the allowance account. And accounts receivable is 1,270,100 debit. Make sure you pay attention to debit and credit. 1,270,100. And the allowance has a debit balance also for 16,580. That is not the usual balance that it's going to have. It should be a credit balance. But as you can see here, it can have a debit balance. So, if it's like that, don't worry about it. It's not a big deal. It just means that we wrote off more than we allowed for because it's normally on the credit side. So as you keep whittling down the credit side to smaller and smaller and smaller, eventually it's going to flip over to the debit side, and you're going to wind up having a resulting debit balance. Okay, prepare the adjusting entries for the companies and recognize bad debts under each of the following independent assumptions. So the first one, we have bad debt estimated to be 1.5% of credit sales and bad debt to be 1% of total sales. So here we have credit sales over here at 5,682,000 and total sales at 7,587,000. So you're going to need these two numbers to answer questions 1 and 2. And then 3, an aging analysis estimates 5% of year-end accounts receivable or uncollectible. So we're going to be dealing with accounts receivable for question number 3. Remember, folks, when I was telling you earlier, sales you treat it one way is very straightforward. Accounts receivable, this is the one that you have to back into the journal entry. So you got to be really careful about this, okay? So let's start with the first one. Bad debts are estimated to be 1.5. Bad debt are estimated to be 1.5% of credit sales. So my credit sales, and I can check up here, credit sales were 5,600,000. So 5,682,000 times 1.5% is going to be the same as 0.015, and make sure you get the decimal place done correctly, okay? That's going to be equal to 85,230. So my journal entry is going to wind up being a debit to bad debt expense for $85,230. And a credit to the allowance account $85,230. Second one, I have bad debts that are estimated to be 1% of total sales. Well, my total sales is right here. So 7,587,000 times 1%, which is going to be 0.01. 7,587,000 times 0.01 equals to 75,870. So my journal entry is going to be, again, debit bad debt expense for $75,870. Credit the allowance account Okay, next one, number 3, 5% of accounts receivable. Accounts receivable is 1,270,100. So 1,270,100 times 5%, so it's 0.05. That gives me 63,505. Here you have to step back and say to yourself, wait a minute, this is not going to be my journal entry. Why? Because it is accounts receivable. The others were based on sales. This is accounts receivable. So the 63,505 is supposed to be my ending balance on the allowance account, and it's supposed to be a credit balance because everything that I've done has gone to the allowance account. So my ending balance should be 63,505. So if it's going to be 63,505, what do I have to do the journal entry for to get from 16,580 debit to a credit of 63,505? And the answer is going to wind up being that I have to add the two. So the answer is going to be that I have to add 63,505, my ending balance, to 16,580 to figure out what my journal entry will look like. So plus 16,580 equals 80,085. So now my journal entry is going to be debit bad debt expense for 80,085 and a credit to the allowance account Okay, so my journal entries are going to be here, here, and here. Okay. With the calculations for each journal entry just above those journal entries. Okay. Number 2, show how accounts receivable and the allowance for doubtful accounts will appear on the December 31st balance sheet given the facts from Part 1. And it says Part 1A. What they're talking about is this one right here. So bad debts are estimated to be 1.5 of credit sales. Okay, so that's what they're really getting at. Okay, so you had two things. you gotta look at this one, and then you have to look at this one, because that'll be the answer to number 3. Okay, so let's take a look here. We did bad debt expense debit. We did a credit to the allowance account, so that will affect my allowance account. That will also affect accounts receivable. So if my accounts receivable was $1,270,100, and I had a credit of $85,230 with a debit balance of $16,580, then when I balance everything out, I should come up with, I'm going to go $16,580, and I'm going to do a negative, and I'm going to then add $85,230, and that gives me $68,650. Okay, and that's going to be the allowance account. So this is accounts receivable, AR, and then the $68,650 is the allowance account, and that will be subtracted from accounts receivable, because the allowance account is a contra asset account. So subtract that from 1,270,100, and my net realizable value for accounts receivable is 1,355,000. I started to add these numbers, and I should have actually subtracted them, so I would have to have 1,270,100 minus 68,650. And that comes up to be 1,201,450, and that will be my net realizable value. Okay, so that answers question number 2. Question number 3 is to look at this third example right here. What would accounts receivable, the allowance, and total be from this situation? And again, I need to emphasize that the 63,505 is supposed to be the ending balance. So if I were to put this over here, and I'm just going to stick it in, 63,505, and then this 80,085, that came up here. To make this happen, okay, since we're dealing with accounts receivable, then you're going to have to use 63,505, not the way we did it for this problem here. Okay, so there's going to be a little bit of a twist on this one. So I will start with accounts receivable of 1,270,100. And then my allowance will be 63,505. Which then gives me net realizable value 1,270,100 minus 63,505 equals 1,206,595. And so this is the answer for question number 2. This is the answer of question number 3. And we are done. Thank you. Have a good one.